The alarm clock has been set.
Yes.
Janet Yellen speaking at the annual confab that's hosted by which Federal Reserve, Dave? You know? The Federal Reserve. It's not the main Federal Reserve that hosts the Jackson Hole
Is it
annual.
at the West Coast?
Kansas City.
What?
I don't know why, but it's just a tradition. Kansas City decided, every year we're going to hold this confab in Jackson Hole, Wyoming.
Name the most famous person from Jackson Hole, Wyoming.
Don't know.
I think it's Dick.
Harrison Ford.
Okay, Harrison. What?
Oh, what?
Okay. Yeah.
Okay, all right, there we go. Little trivia. I don't know if he's from Jackson Hole, but for
Well,
sure.
he lives there.
Okay.
He lived there. Okay, well, anyway. So they all get together. Central bankers from throughout the world gather there.
It's a party, I'm
Yep,
sure.
it's a party. I'm sure they're just, got their slide rules out and their economic forecasts and all that.
Abacus
Anyway,
is-
so Janet Yellen speaks Friday morning and moves the markets by saying, David, what did she say?
She quoted as saying, in light of the continued solid performance of the labor market and our outlook for economic activity and inflation, I believe the case for an increase in the federal funds rate has strengthened in recent months. End
Whoop,
quote.
whoop, whoop,
Yeah.
whoop. So now all of a sudden the interest rate for the United States government to borrow money for a period of 10 years went from about 1.52% on Thursday, and it jumped up to 1.63%. Now, and by the way, the odds, people place bets on the movement of the federal funds rate, and right now I think that's up to about 40% for their September meeting, which occurs September 21st. But what this really boils down to for all of us homeowners here in America, or home buyers, is two things are going to happen. Already, long-term interest rates, like 30-year fixed rates, inched up a little bit. On Thursday, we could do 3.375 with 25% equity and all the other right stuff on a $200,000 loan with no points. Just our normal $1,165 of loan cost, actual loan cost. What did we end the day at?
It would have cost 0.3 of a point to do 3.375. APR is 3.42, which in real numbers is about $600 in points.
Yeah, $600 in points. So that was the impact immediately of her comments. But then the other thing is if and when the Fed does actually raise interest rates, that will have an immediate impact on the prime rate,
yes,
which is the rate that banks allegedly charge their best customers, and which is the index tied to like 99 and 44.1% of all the home equity lines of credit in America. So right now, David, the prime rate is at
3.5%.
All right. So most people, though, on their home equity lines don't actually have a rate at prime unless you got it a while back. Because prime went so low that banks decided we can't actually lend to people at prime because it was down as low as 3.25% for a while. And, back in 2009, 2010, you could actually get a home equity line of credit right at the prime rate. But more recently, the going rate has been prime plus a half. Okay, so if you're the best customer with the best credit and you still have 20% equity when considering the maximum you can borrow on the home equity line of credit, you're currently sitting at 4%. Mm-hmm. And soon, at some point in the not-too-distant future, going to 4.25%.
Correct.
Now, if you have less than 20% equity, it's more like prime plus 1%. So you're probably around 4.5 or 4.75. So you're soon to be tickling that 5 number. That's probably a good reason right now. Sounding the alarm. Don't hit the snooze button.
The clock has been set.
The clock has been set. That's a really good reason. If you've got a big chunk of money on your home equity line of credit that you really have no hope or intention of paying off, why not weld it together with your first mortgage? Mm-hmm. Are you seeing a lot of that? David does a lot more loans per week than I ever
yes.
do. So are you seeing that as a continuing?
For sure.
Yeah.
For sure.
So if you're sitting there with $20,000, $30,000 on your line of credit, and your current mortgage rate is still sitting there at 4 or even 3.875, we can probably put those two things together. You do have to have 20% remaining equity to put a home equity line of credit balance together with your first mortgage.
But with the home appreciation you just said, maybe we can do that.
No, what an elegant
tie-in
combination there, David. Propers to you.